I didn't know what I was doing. I didn't know what investing for appreciation was, or what cash flow was, or what the BRRRR strategy was. I consider this to be a bad real estate investment. Yo, MTV Cribs, I wasn't expecting you guys till Thursday. Come on in. All jokes aside, guys, PV here. This was my first ever rental property that I purchased. The investment didn't go as planned, but I learned a ton from it. So come along for a tour. So as you can see, the property is very turnkey. My first rental, you never forget your firsts. So I'll come and show you guys how things are looking. Right now we come into the main living area here. Looks nice, we got the floor. Looking forward to showing you guys a little bit more before we get into the details on this investment, all the lessons I took from it, as well as, where my mindset was at when I first purchased this property. Come on along. So this was my first investment property. I didn't know what I was doing at the time as a real estate investor. I didn't know anything about the various real estate strategies available. I kind of knew what investing for appreciation was. I didn't know what investing for cash flow was. I didn't know what the BRRRR strategy was, the rent to own strategy, nothing about real estate. I just thought I could buy this property. It was beat up in small areas, like, it didn't have modern finishes. It didn't have hardwood flooring, things like that. I felt I could go ahead and make those upgrades for the property and then flip it for a quick profit at the time was a hot market. So what ended up happening was I purchased the property and the market cooled. Inventory was not moving, not nearly as quick as it was previously, and I was stuck with this property. At that point is when I decided to rent it out, and suddenly I was negative cash flow on this property, $1,400 a month, which is horrible news, right? So, and that's something I didn't realize until I got stuck with the property, and now I suddenly have to make payments. Even with the tenant in here, I'm now covering an extra $1,400 out of my own pocket to keep this property afloat. So less than ideal in any investment property. So once that happened, I needed to sit down and figure out what my options were. And immediately, this being a single family home at the time, the first thing that popped into my head is, how can I reduce the burn that I'm taking in on this property? And that was by converting it into a duplex. So essentially what that means is right now, as a single family home, this entire house just had one rental unit. If you were to turn it into a duplex, that would mean making it have two separate rental units. So what we did was we went ahead and hired an architect, went through the permitting process, and we got a door cut through at the side and made a full 1-bedroom, 1-bathroom apartment in the basement, which then I could rent out and utilize that income to further reduce my negative cash flow burn. So we went ahead, got that done. That cost me more money that I had to sink into the property, but based on running my numbers, I felt that if I invested that cash in and I was able to reduce my burn, and that all that money I spent would get capitalized to the value of the property and the market would respond well to that, it's something that would help me and I would not have to pay negative cash flow on this property. So we went ahead and got that basement unit done and rented out. And by doing that, I was able to get my negative cash flow burn from $1,400 down to about $300 a month, which was amazing for me. Again, still a less than ideal investment, but was great to reduce that burn. Now, once the upstairs tenant finally left and turned over, market rents in the area had gone up. I was able to rent the property at a much higher rent and then eventually get to break even from a cash flow perspective, which was awesome. So when I think back at this property and this entire experience I've had owning it and its entirety as an investment for me, there's three big key mistakes that come to mind. The first one for me is I just didn't know what I was doing. I knew that real estate was a good investment and that if you hold long term, you'll make money in real estate, but I had no idea what the various strategies in real estate were. So investing for appreciation, investing for cash flow, for example, the BRRRR strategy, had no idea of any of that. I essentially trusted a realtor that I knew, and they told me to purchase this property and that if I followed these steps, I would make money. And that's something that I'm sure a lot of people out there can relate to, especially if they're not educated about real estate and they don't know how to invest in real estate or what the metrics are for what makes a good investment. So if I were to do it again today, or if I could go back in time, I would first educate myself on how to invest in real estate before diving into a property. I would understand the metrics on what makes a good real estate investment. What kind of cash flow, cash on cash returns is considered good for this particular market. What kind of cash flow can I expect in this market? What kind of appreciation can I see on an annual basis in this market? If you're going to be flipping, what the margins look like for flipping, right? So if you're going to spend X amount of dollars into the property, how much is that going to cause the end valuation of the property to increase? Because that's ultimately what you're doing with flipping. You're buying it at a certain cost and then you want to sell it at a profit. So every dollar that you're putting into the property needs to have an increase on the dollar amount that you're going to be selling it for. So I would go back and learn as much as I can about real estate investing before I would go ahead and jump into a property, whereas I did it blindly back in the day. My number two biggest mistake was not considering multiple exit strategies. So, if I look back at it, I guess technically the strategy that I had picked with this property was to flip it, even though I knew nothing about flipping it. Again, I trusted someone's word, and I thought if I put X amount of dollars into property, I would just be able to flip it at this price, and that was the extent of my knowledge. Now what I would do is I would first know the intricacies of flipping. Again, how much dollars put into the property will result in profit at the end. But I would also have another exit strategy before I would pick up that deal. And that exit strategy has to look good for me. So let me explain. But when you're investing in real estate, you need to not only have a plan A, but you should have a plan B and even sometimes a plan C. So those would be your multiple exit strategies. So in my case, when the flip didn't work out and now where I'm suddenly stuck holding this property, or if I were to sell it, I would take a huge loss. My plan B would be to hold the property. And that being said, I would make sure when I'm doing my due diligence on purchasing the property, I would account for, okay, if I were to get stuck with this property, what would I be able to rent it out for and what would my end burn cost be on a monthly basis? If I'm going into a deal where worst case scenario, at least if I were to rent it out, I would be at break even or slightly even positive cash flow or even a tiny bit of negative cash flow, that's not so bad. And that could be a good exit strategy until the ultimate sale of the property could happen. So always when real estate investing, have a plan A, a plan B, and even sometimes a plan C. Now, my third biggest mistake is once I realized I was in this situation and it wasn't looking good in terms of flipping to get out, I waited on taking action. You should sit down and analyze what your best plans of actions are right away and make a good informed decision. So in my case, for a long time, I paid that $1,400 negative cash flow every month and definitely hurted my savings and my overall financial position until eventually I had that conversation with myself and decided what are my best options right now that I should implement to solve this problem. And ultimately that was converting this property into a duplex. So we went ahead and started researching what the permitting would look like, what the cost would look like, and whether investing that extra money to save my burn would be worth it or not. Ultimately, I performed that analysis and I determined that the numbers would support it. If I invested $25,000 to $30,000 into this property and got that duplex conversion completed, the rental income that came in from it would significantly reduce my burn. I would be able to capitalize the cost to the property and ultimately collect it back when I did eventually sell the property. So based on that, I would say take action quicker. Don't just sit there and play the fiddle and be sad. look at what your options are and take one that's gonna help you get out of this situation or at least make your situation better. So now to summarize, I had purchased this property at $624,000. I had rented it out at $1,700 a month, and I was at negative cash flow of $1,400 per month. I then went ahead and sunk an extra $35,000 into here to get that basement unit completed, and then rented that basement out at $1,100 a month, which then reduced my burn significantly. So I was at about $300 a month in terms of burn. And then now fast forward with the market appreciating and me covering that burn for a little while, I just finally sold this property at $820,000, and I managed to walk out in the green. So overall, things worked out, and I'm happy from a capital gains perspective, but if you factor in my operating loss on an annual basis, as well as my opportunity cost on where I could have invested all of that capital somewhere else instead and made a healthier return, I consider this to be a bad real estate investment deal. So if you guys enjoyed that video, make sure you hit that like button. Now, if you're an investor, whether you're a brand new investor or a seasoned investor, put some of your stories in the comments below about your first property and what that experience looked like. Now, if you're looking forward to more real estate content, make sure you hit that subscribe button, and I'll see you guys soon.